Well, stops are our lifeline to the market. These are the things that protect us from losing things, protect us from losing our profits, protect us from losing our money, and they're vital things to use when you're trading, because in the end, we don't really know what's going to happen. It's things like the physical stops that will perform far better than we normally do. Okay, so I just want to go through today, make this a little standalone video, just so you can remind yourself all the time of some of the things we need to know about stops and why we use them. So, stops, trading made simple, easy and effective. Can you push the button? And this seems to be the problem with most traders. We know what to do, but doing it is a difficult thing. So I'm just going to remind you a little bit about why we do these, why we use these stops, okay? So, first off, I'm going to do a little bit of old-fashioned fab analysis on the stops for you, just so you can get an idea. So the features are, they are very simple. They are very easy to set and easy to manage. Some very simple rules about where you set them, a certain percentage below the price, moving average, whatever it might be. I'm going to go through a few ideas for you later on, but make sure they trail, follow prices when they rise, so you protect your profits, and make sure they don't move down ever, okay? However, simple, easy to set, easy to manage. Price analysis, because of the structure of price, support, resistance levels, moving averages, they allow us to put a structure around identifying and isolating high probability entry and exit points. Okay, so this just gives us a guide. So if you're just using fundamentals, it can be quite hard to know where you should do. But price analysis, and we can see graphically where the buyers are coming in, where the sellers are coming in, it gives us an idea of where we can put a stop below to make an odds-on point for success. Okay, so advantages. What they do two things. They limit your losses because you can, and lock in profits, don't let them escape. Again, when I say limiting your losses, you have to do that. You can see, put a stop in there, you can say, right, I'm safe, but you need to make sure that you enact that stop. Okay, so limiting your losses and protecting your profits, and this is how your balance is going to work out if you trade successfully and you've got a reasonably good trade plan. And it's not harder to build a good trade plan. What it is hard to do is actually implementing it, selling when you should sell and buying when you should buy, okay? Pushing that button, okay? So that's your advantages. Now the benefits are stops. They help you make money. That's what they're there for. They keep you safe, protect you. You can sleep at night and feel safe, okay? If the price goes below your stop and you haven't taken it and you're still in the market, you are feeling very nervous and you are fearful. And that's a very bad state to be in if you're trading properly, okay? So make sure you listen to your stops and enact them. Keeps you in control of things. If by being in control, you feel safe. If you're not in control, you feel at risk. And that's not a good thing, especially for your decision-making process. This will also help reduce your stress levels. There's a lot of traders out there very stressed, wondering what to do. If you have a trade plan and if you have stops in, it's an automatic process of what you do. And as they keep you safe, it's a very comforting factor for you. So stops are very useful from that point of view. Okay, so implementation of them. So this gives you a rough idea of what are the main things that I look for when I'm setting stops. Firstly, I'll initially set a maximum risk level. Whatever that might be, 10, 15, 20%, whatever you want to risk, whatever your time frame is trading, that's your initial stop, where your initial stop goes, and it just never moves down from there. Okay? The price can move down, but not your stop. Okay, so you set the stop within boundaries. As the price starts to rise, I'm going to lift my stop, but I have a controlling boundary that I need, a percentage boundary that I need to lift it in. Now, that could be between 10 and 15%. Again, depending on the type of trader you are, it will depend on where that boundary is. But if I keep my stop moving in above about 10 to 15% below the last weekly close, then I'm happy with that level. And in between that 10 and 15%, which is my boundary, I might use things like lows, closes, or the moving average. Any of those things that can help just shift the odds a little bit in my favour, that's likely where the price is going to stop or it's not going to go below, okay? And if it does, I want to be out. So that's how I essentially set them. I never move a stop down. I always move them up, okay? Once I'm in a trade, I set my initial stop loss, but I'm keen to move that stop loss into break-even level as quickly as I can. Once I'm in break-even level, I'm in a very comfortable position. I know I'm not going to lose any money, but I've got the opportunity to make. So that's a nice position to be in. When a stock hits resistance or it hesitates at a certain level, then you may want to tighten the stop to even tighter than in your boundaries. because it's a bit like ANZ that we talked about the other day. It's gone sideways for 8 months, so we've got our stop just below those sorts of levels to make it nice and safe there. So the price has hesitated, so I haven't tightened that stop up a little bit, as tight as I can pretty well. On the other side of the coin, if you get a strong advance, like a Whitehaven Coal has done now, or a South 32, then you're going to move that stop up probably tighter again, because you want to protect the profits that you are. You don't want to get the top, well, you do want to get the top, but you're never going to get that because that doesn't happen. But what you do want to do is take a big chunk of that trend out of the market. So something like South 32 or Whitehaven Coal, they're big outperforming profits and they make a big difference to my bottom line. And that's very important that I lock those in. So I can tighten the stop under certain circumstances. If we stopped out, I can always take a new high. So that means that, stop is a protection level. So I'm protecting my profit or protecting a loss, whatever it is. But if it makes a new high, then because it's likely a new trend is starting, then I'll always buy that new high. I can always re-enter if I'm stopped out. Okay, now I'm only weekly, so my stops are never on the market, because what I'm doing on a weekly basis, I'm not looking at the daily noise, I'm looking at the weekly price. So on Friday night, I look at the Friday night closing price and I see where my stop is. If the price is below it, I get out. If the price is above it, or I probably lift my stop. Okay? So I'm only weekly, and my stops are never on the market because I take my signals from Friday and I execute them on Monday morning. Okay? So this implementation template I've got here is all reproduced on StockRadar under the About section and the guide to using StockRadar if you want to use that for reference. Okay? So that's the stops and that's the implementation part. The one thing that haunts all of us with stops is actually pushing that button. And I have this conversation all the time with my members. What haunts us is our ability to do the job properly and accept that processes and discipline are it. The reason being is whether you're right or wrong, it doesn't matter. You've done the right thing, and that's a very comforting thing, because we just don't know sometimes what price is going to do. So when a stop goes off, it's come back far enough, we've got to protect profit or limit our losses, and that's about trading to make money, okay? We're not trading to sate our egos or to make sure we're right or wrong. We're trading to make money. So we need to be able to control our risk and control our potential to make profits. So we have stops for a reason. When they hit, you must press that button. Okay, so that's really all I wanted to say on stops. I'm going to make this a standalone video, which I'm going to put on the YouTube channel, so you can have a look at that and refer to it every now and then as to why you use them. So I hope you will, and listen to those stops. Okay? Thanks for listening.